Welcome to another breakdown. Today is Tuesday, August 16, 2022, and we're looking at a price action of 33,888. And basically, we had a great week so far with a big push on H4 that we closed yesterday with a profit of $7,000. And it was good risk management and also a showcase of structure setup. So now we discussed liquidation zone and we discussed trend setup off of fib. It was a 338.2 retracement level after a break of resistance, then a retest, continuing that bullish momentum to the daily resistance. Very basic setup, yet very effective. Of course, observation of RSI and the pressure of the cash flow. So today we have a different kind of setup, and I'm kind of seeing a channel being formed, ascending channel being formed, and it's a very interesting setup, but it's very tricky at the same time because sometimes the fib collides with the channel, causing heavy bears to come in and sell off at these highs that be forming on uptrend. So as you can see, I replace my daily resistance and support to H4 resistance and support. And the reason why I did that is because whenever I see a tight range being formed around areas of resistance or areas of support, any type of rejection, I'd rather have a smaller range with H4 resistance and support to kind of give me an indication what is my structure time frame trying to tell me. As soon as I break structure on that time frame, then my buys will kind of divert into more bearish. But as we can see, it's very bullish at the moment. So we have a fib drawn from 33,500 H4 support all the way up to 33,940. And basically we're retracing right now around the 23.6 area. It is not a PRZ level, it is a consolidation slash continuation area. So that's why you see that I said no trading zone. And the reason why is because one, there's no volume right now. Two, it can consolidate and then break structure and actually reject that resistance level and continue to the downside. Considering looking at the higher time frames, and you can see it's very bullish on the daily still, but it's hitting a very heavy supply zone. You look at H4 as well, it's giving some type of divergence on the RSI when you see lower highs being formed around this supply area, meaning that cash flow is being taken out of the equity in comparison to the momentum that it had before. So the ADX probably turning to the minus right now. Looking down to H1 and M30, we can have more details to kind of see how the channel is actually forming. And as you can see, there's always see the channel started about right here, retest, retest, retested yesterday, and we picked up off of the counter trend line break and retest and continue to the upside. So clearly you can see there's a channel forming, and that's usually when there's FOMO. Whenever there's a rally, you start to see this channels being forming based off of people's catching up on the trend. But then some people always catch up too late, and then they get the heavy sell-off. As professional traders, we always practice dynamic trading and professional risk management. So you have to have some type of plan of how you approach these patterns and points of interest. My areas of interest are going to be 38.2 retracement, and we can go one lower time frame at M15, and you can see my alerts are around certain ranges for a reason. Trading zone, whether above or below. I need volume, I need many time frame RSI to be on my favor, and I need some type of candlestick analysis forming around these resistance levels so I can actually have enough confirmation and confluence to take that trade. But what I would prefer for the chart to print out is actually a sell-off right now or during London. I get a retracement around 38.2, and then I would have a beautiful confluence with M30 moving average, pivot point about 33,750, 38.2 retracement on the uptrend, and I can take it to the upside at H4 resistance, and everybody's happy. Ideally, that's what I would expect, but you know, um, usually with the charts, you just have to be a dynamic trader, and this is where I get my edge, is to be a chess player and really anticipate all possible moves and all possible scenarios before I even make a decision. That way, you are a few steps ahead of the bears and the bulls. And that way, you're just here to butcher. So I let the market tell me the story, and I'm just here to read it. I'm not trying to predict it. I'm not trying to make it. I'm not the writer. You know, I just react to price action and structure. If I see some buys around here, I will be very, very happy with that. So I would expect some demand around this area. So I will buy above 33,795. Let's say 800 QP. And I will try to sell actually on top 34,064. But of course, we're gonna have to consider RSI, divergence, reversal pattern, and of course, we want to see a breaker structure on a smaller time frame. That's it. So right now, we're just gonna sit back, relax, and we're gonna be disciplined and wait for the volume to kick in. Our favorite session, New York session. Yeah, we're 6 hours away. I'm just gonna sit back and check on the market every few hours, every H4, and see how these H4 candles print, and then we'll see like around maybe 7:30 a.m. We'll see how the market reacted over these hours. Are we actually on top and preparing for a sell-off, or are we actually retracing to the 38.2 where we can take our buys? Either way, we'll handle it accordingly. And that's it for today. And here we are following up on yesterday's breakdown, and our analysis played out perfectly. So basically, we saw the big push on the trend line, came back, testing the structure, and just like I said, around 7:30 when the volume picked up, we broke that counter trend line around here, and then came back on a lower time frame, retested the counter trend line, and then of course you see the big bulls coming in. So that was the trade that we took, and we closed over here at the daily resistance. We saw obviously the negative 61.8 reversal at also a daily resistance, H4 resistance. So we knew there was bears coming in. I did not take that trade, but I just did it on the chart to kind of see how it would play out, and the entry was around this bearish engulfing pattern, knowing that it was exhausted. Also around here, as you can see, it's maxing out as well around this area. So that's 100 points. Usually we don't recommend people to hold it for too long because sometimes the bulls are still in the market. It's just only a matter of time until they show up. That's it, y'all. I hope you enjoyed my breakdown and the trades that I take. It is definitely a dynamic trading style when it comes down to choosing the areas to where we enter and the areas where we exit, and also keeping in mind volume, structure, and price action. Y'all make sure to subscribe to WeTheCharts and like our video if you learned something or two. And if you have any feedback, make sure you write down below in the comments. And to each one, teach one.